Good evening. This is the Eye of the Storm podcast with the technical update for the S&P 500 being recorded on Friday evening, May the 10th, 2024. I am going to post this early as my Thinkorswim and my TD Ameritrade account is being switched over to Schwab. As we all know, Schwab bought TD Ameritrade quite a few months ago, and I'm finally up for transferring over to Schwab. So I won't have access to my charts tomorrow when I normally would post this update. So we're going to get it on a Friday. It was a fairly steady week. It was a week that saw some very extreme intraday volatility. Just a little bit more difficult to trade as we navigate our way higher. As I suggested last weekend, that the move that I was looking for needed to just go and keep going. And I had thought, my belief was that it would go quickly. And thus far, it has. When you consider that on April the 19th, we were touching 49.53 in the SPX. I'm starting on the SPX. I'm on the daily chart. Just to do a quick review of that larger picture, it has remained the same, but I did make mention of an additional alternate view. And yes, it's out there, but I actually am now going to hold off, but I will give you a little bit of what it would entail. And that is that this, instead of being a primary wave A, this alternate would consider it a primary fourth wave, and we're in a primary fifth wave to finish the cycle third. So cycle third, I have it down for January of 2022. There are a lot of other technical reasons that are being given to me, which I'm aware of. And so I see the market a little bit differently, where I feel that we are still in a primary B wave. We've yet to exceed 1.382, which is the irregular when you're in an ABC, and the B wave is going to be an irregular. The measurement is 1.382. That's usually how far above the third wave before it the market gets, how far above or below, I should say. And so that's all in the B wave, and then the C wave brings it all back in. And then just it's like that rally that we initially thought that's what we're correcting gets corrected twice. So that's something that Elliot wrote about. And in essence, it just, let me just go quickly out to the 20. What it suggests is that I have to redo this. And instead of all being, this would end up being primary wave 3. And this would change as well. And so again, this is the 2008-2009 would end up being a primary wave 2. And then this all would be a primary wave 3. And then we're in a primary wave 4 and already in, and now we're in a primary wave 5 up. Now, I think, other things are factored in there as well, but that's kind of the gist of that particular count. Right now, I'm still considering the high of January 2022 as the completion point for cycle wave 3, and that we're in a cycle fourth wave correction, of which we've done primary wave A. We're getting ready to complete primary wave B. Now, again, because the case up here, as it pushes again towards new all-time highs, that I'm starting to get a little bit more of some of the components that type of a more bullish pattern could spread to other like companies within that small sector of these individual stocks. And cycle-wise, some of them are looking pretty good for continued upside. How bullish that is all going to turn, I believe, is yet to be seen. So let's drop back to the SPX, the cash on the daily. So off of where I'm considering primary wave A, which was the October 2022 low, I believe we're still in an ABC and we're in the C wave. to complete the intermediate C wave to complete that primary wave B, and then we begin a primary C wave correction, or the finishing leg down to finish the cycle wave 4. So here we are, and those are big waves. If you have to consider that this has been underway for more than a year. In fact, we're talking about a year and 6 months that it's really been even longer, 7 months, that it's been underway from that low to finish this move. So if we're dealing with, we're going to get a primary C wave down, this took over a year and 7 months, a year and 8 months, maybe by the time it's all done. That C wave, yes, it may seem fast and it may have points where it'll go really fast, but I believe it will take its time to get down to where it needs to be, and there'll be plenty of ups and downs along the way. Now, back into here. So we have A, B, and then we're inside that C wave. This is the daily chart where we have 1, 2, 3, and 4 completing in April, and that puts us in minor wave 5. Dropping it down to the 4-hour chart, let's go inside and look. 1, 2, 3, 4. So we're inside minor wave 5, and let's open that up. There's the 3 up there, and then we start to come A, B, C. There is the minor wave 4 here, and we are in, there we go, we are in the minor 5th wave, of which is also subdividing. Minute wave 1, minute wave 2, we're inside minute wave 3, and it does appear that at today's high this morning, and that would be at 52.39, that completed wave 3. That's how I'm looking at this right now. I brought it down to an hourly chart so we could look inside. It is not the easiest because you see we have gaps in several places. But 1, 2, 3, okay, usually after the third kind of marks a spot where we're done, and it's like, okay. So that would be more like the exhaustion gap, so to speak. And then the flip and the turn was fairly strong. They kind of came straight back down. So very quickly this morning, the market found it's about half hour, and this is now turning more typical. So we have to kind of pay attention to a couple of things options wise. If you're an options trader, then there's a peak where you can see that the call buying turns into call selling. And that was that point right there. And then of course, everything turns and goes with. Now, so if we're in a 4th wave, what we need to do is add the retracements for a minuet wave 4. So we're still inside minute wave 3. We've completed minuet 1, 2, and 3. We're at a minuet wave 4. Correction was still a 5th wave up before we're done with minute wave 3. So we still have quite a venture up yet to do. And I'll get to another portion of it just in a moment. So in any case, I do think what we got going on, you can see kind of like a pennant there. We start to come back down. Now 236 is 51.85. More likely, see, we got the 50 sitting right. This is the 1 hour 50 sitting right underneath that. That'll provide some support. If I go back to my 4-hour chart and take a look to see what may or may not be sitting under there, well, we have like the 13 and the 20. 20 is like at 75. This is at 86. So, but a more normal 4th wave would bring it down to 51.52. We're in that same position. Don't want to see this drop very far. Like at 50%, we're touching the top of minuet wave 1, minuet wave 4, no can go. So I would think between 51.85 and 51.50. And then we put in a 4 and we head up. So don't forget that that's a pretty steep drop. Now, if it comes down quickly, it's a pretty steep drop, and then we can go. And that may happen on Monday next week or into next week. So it's actually, I think, can get very, very interesting from here, because what we need to finish is first minute wave 3, then to do a minute 4, and then a minute 5. And it's from there that I'll be looking for some real fireworks once that thing is over and whatever's going to happen. Now, we do resume economic data next week. We had some this week, but we will get more of it next week. And so what we are really will be looking for is how the market's going to react to the CPI and the PPI that both will be coming out next week. And we also have a few other things as well. If we begin at the beginning of the week, Monday, we just got Philip Jefferson and Loretta Meister out talking. Tuesday, we have the producer price index. A couple of Fed people, including the chairman, will be out speaking. And then on Wednesday, we have consumer price index, U.S. retail sales, home builder confidence, business inventories, plus a little ration of Fed people. And then on Thursday, initial jobless claims, Philly Fed manufacturing, housing starts, building permits, import price, industrial production capacity utilization, and a roster of Fed presidents and vice chair and the likes. And then on Friday, U.S. leading economic indicators, plus the it is the May monthly expiration, which should cause a little bit of magnetism during the week as it leads up to. So we're back to paying attention to the economic side of the market. The technical side, though, does continue to suggest that we're going to come down and then we're going to rally. So once I do have that 4, then I can put 1 to 4 to give us that 5th. But as it stands right now, our resistance comes in, and there's a couple of places that I can fill in a blank, and I'm going to do that right now. One would be is that we measure out, nope, that's the wrong one. And so we're going to go to this one and go here. And nope. Yeah, that'll work. Excuse me. Sorry about that. Shoot. Right there. Sorry. But sometimes, yeah, I gotta get it perfect. Come on. There we go. So the 100%, the 161.8. So this one, the 3, we're way up there. So again, just to kind of fill in then that in, all of these don't need to clog up our screen, because what's left is 2.618, and that's at 53.46. That would be for minute wave 3. That's not saying that's where it's going to go. That's saying that as far as Fibonacci goes, everything else has already been exceeded. So we go back to what we have here for this particular third wave, which is already in, waiting for the 4, and then I can go to this angle and push and see what we have. So initially, we have for the minor 5th wave, and it could just be a stopping point for the third wave, basically. Comes in at 52.60, we'll call it. So we have that initial resistance at 52.39, 52.40. Then we have 52.60, and then we have the 1.382, which is the primary B wave measurement, and that's at 53.12. Again, cash market. So, and as well, yep, I know there's a call at 52, and I know it has been penetrated. Market has now closed above it. The bulk of that position for that call wall is in May the 17th expiration. So there was some there today. So again, the drive will be to push the market below, and then again, we'll see if it stays below for Friday's expiration. That'll be the ticket. And those of you that get angry with the fact that I'm talking about putting call walls, understand that it will have an effect on what the index does. So because if they keep it in place, then you know that traders are going to try to drive prices lower to protect or get out of that position. So yes, it's where options will kind of take precedence, and they can do a lot of adjusting by either buying or selling. So again, has an effect on what the market does. Okay, so initially what I'm going to look for is that we still We are still, so technically, we are still in this uptrend called primary B. It's a counter trend rally, in my view. The alternate would suggest that we're inside of a primary fifth wave, which does project much higher than the 53, 54, 55 levels that we can reach from here with this particular count. Thus far, minor wave 5 would be equal to minor wave 1 at 54.50. So that is one level. And then we can go higher. We got 57, 55 still within that minor fifth wave. And then you can see they are sitting, waiting to be put into place. So yes, there is still upside potential, but at some point, I have to seriously look at how far it breaks 53.12, which is the final marker for any irregular B wave, which is why I'm now beginning to touch base and talk about if the market goes further. Now, again, I just want to say that the way that I'm structuring a lot of what I talk about is, and I go over the bigger picture, but if the current near-term picture, I'm still talking upside. I'm still talking like from the long side. So my work basically is more for a swing trader, could be a position trader, but they're positioned for the overall move. So they're not necessarily sitting in cash waiting for the world to end. They are even waiting for a downside to start. If you are a trader, and again, that's what I talk about because that was what I did. I stood on the floor as a market maker. So I produced a market. So you ran positions constantly. Yes, there were times when I would build a position that was more dependent upon direction than not. And I know that there are people that they're just reinvesting or whatever the situation might be. That I have continually talked about the ability for the market to continue to move higher. And right now, I always am presenting both sides. A bullish and because I'm using terminology that I don't like to use, but a more an outlook that covers the upside, an outlook that covers the downside. The market will make abundantly clear, but it can't right now because it doesn't really know. And why? Because everybody's split, and that's fine. As a trader, we're just going in and we're trading every single day. Or if you got a position on, be the trader. Know how to adjust your position to continue to trade and make your money. So it's like you're always running a position and you always have ways where you're taking some positions off and therefore you're taking profit out of the positions, you're adjusting, you're working to pull it back in line and all kinds of things. So here we go. Now, back at the ranch, the SPX, I believe, still remains within a minor fifth wave going up. And within it, we're not done yet with the minute third wave. I think we got a little bit more downside and then a swing back up higher, an additional high above where we were today, which is 52.40. So this is basis the cash. The higher we go, it knocks that put wall out of the water. And then I do think it's a very easy, quick cruise up to 5,300. And they'll continue to build these call walls, and they may move that one, because there is one there. They may move it and shift it up to 54. That's all a part of trading. But again, it's trading. It's not anything against what's happening. We will ask questions like, how could this be possible when the news isn't basically all that great for the economy? It depends on how you want to look at it and which narrative you want to listen to. Right now, there's still a tremendous amount of money being traded within our markets. Traders from around the globe, and it's not saying anything how wonderful or great we are, but we are the market of choice still because there's too many restrictions in other larger countries. And so, yes, there's a lot of trading from the US to Germany or to the European zone and vice versa. But the United States still has a lot of money being put into it. And as long as that's continuing, there's going to be plenty to trade, and there are going to be different ways in which people are trading. The larger money does not necessarily place a bet like we're bullish or bearish. They are changing and they're following trends all the way along. and they may be bullish on this or they're bearish on that, and they may be bullish on this and they're bearish on, etc. So please understand that if you're in the market, being able to be more flexible and work your position. You know, if you're just straight short, if you're just straight long, I mean, that's up to us as individuals. But I think there's a way to play the market and trade. And so that's my goal every day. So I still believe that we still have a little bit of downside to go. I've given the markers 51.85 down to 51.50. The break zone, at least for this particular count, is at 51.23, 23.50. I'm too much above there, or too much below there, I should say. Changes this whole thing. So, and then we'll head up, and then we have our following 52, 59, 53, 12, 53, 46. And that would be just to finish minute wave 3. All right, so over in the S&P, excuse me, in the futures market, it's the same deal coming up. There's the A, the B, 1, 2, 3, 4, and we're inside this. Let's open. So again, and this is going to be a little bit different because in the NASDAQ, I don't think that wave 3, the top has been reached yet, but I am going to double check it before I do that recording. So here we are in the futures market. We have 3 and then 4, the minor degree fifth wave up. Our first resistance for that minor fifth wave comes in at 53.64. That I don't believe is one that will complete it, but I think that a third wave, probably the minute, will find resistance there, maybe to complete, put a fourth wave, and then do one more run. So in the meantime, I think that today, same deal that we just saw over in the cash market. I think we finished minuet wave 3 and we're in a minuet fourth wave. What could that look like? Well, we go right over and we put in the retracement levels. 236 is 52.10. 382 is 51.77. Those would be the areas. Wave 1 is protected by the 200, isn't that great? And comes in at right there, 51.54, basis the futures market. I really don't want to see it below there, so it's a little bit above this 50% marker, and the 200 is sitting at 51.60. So it can come down, maybe try to touch it, but don't break that level. So anyway, I don't think it will, to be honest with you. I think there's a lot we'll be picking up again next week in NVIDIA and SMCI and some of the other. We have AMD that'll probably participate a little bit. Apple, again, wanting to not be sure what it really wants to do. But let me just say one more time, May the 17th is the monthly expiration. And for the bigger players, the Apple, the AMAT, AMD, Amazon, Google, etc., all the way down the list, they will be in play. And it behooves you, regardless, but if you're trading Apple or any of these stocks or participating on the index, then it's okay to look to see what the open interest is in some of these strike prices, because that's where the bigger players may go for. So here we are. Looking for a dip lower and then a continuing rally to finish the minute third. Then we get a minute wave fourth down, and we'll be able to put in those fibs once all those levels have been reached. Because again, we have 1.618, that is for minute wave 3 at 52.89, 52.90. And right above it, we have the 1.382 on the futures basis at 53.07. I think that will likely be broken. And so here it's the same deal. If I'm looking at this, then what are we essentially in and how far can we go? So then that's more to the alternate, which I went over with via the cash market. The numbers would change simply because it's the futures market. But they're there, and we have some of them here. Minor 5.618 at 53.64, 100%, which is the equality, 56.14. That's way above all these call walls, folks. And not to get upset about the call wall. It should be resistance, Is that where it's going to end? I do not know. Nobody knows. That's what a lot of those traders are thinking. So think about this. If you got a bunch of shorts sitting there, what happens if they really plow through it and they break it and it goes? I know I've given you this before and people go, oh, come on. But think about an earthen levee. And when the water on the one side pressures and loosens the dirt and plugs and punches a hole, and suddenly that water pressure starts to go and the dirt starts to give, and then suddenly it just drops and that levee wall goes and it just a flood comes out. I think, not that I don't want to be that graphic, but if these short positions are big enough here and they hold them all the way to expiration, there's a lot of adjusting to do if they break and run, because there'd be options. They expire on Friday. They expire that day. So there could be a lot of volatile moves and it could blast right through it. And I'm talking 5,300, folks, not 5,200. But they may come back down below the 5,200. Sets up a whole dynamic going. All right. So I'm looking for it to come down. We do have the moving averages still looking very good. They're not getting too upset. Getting flat with the little downside we had this afternoon on the 4-hour. I'm going to bring it down to the 1-hour chart. We'll take a look. So we got the 2. Yep, it's a little bit strange. All of this was very strange, but that was the 1, A, B, B, C. It's very ugly, I know. And it happened very fast, I know. But it's a minuet degree. And it's kind of the way it's working out. And look what it did after. So 1, 2, 3 came up. It surpassed 1.618 by a little bit. So we got it coming down. In the 4, here are the parameters. And we're looking for that ABC, but again, too early to tell. I'll drop down to the 15 so we can take a look inside. And let's go there. So we're coming in here. Well, that looks pretty good to be an A, or yeah, it could be an A, and this could be a B. And then we get a C wave down, and then we get a quick move. We'll drop about 30 points. 52.10 sounds good. Maybe a little bit more. So, and then we turn around and then we begin to rally again to finish this move. And then your first look is at 52.64.65, 52.90. And then we're looking at 5,300. And we'll see what happens. Ultimately, the market is basically telling us as well, if the count is correct, that just finishes minute wave 3. We get another 4 and a 5. For sure, it should be broken and left in the dust, actually. Okay, that is going to be about it for the S&P. And the next Elliott wave update, God willing, that's because I'm supposed to have all my charts and everything will be back and ready for me to go look at on Monday morning. So the next Elliott wave update will be on Monday, May 13th. Have a great weekend.